Hey guys, just a quick update. Today's a Saturday night. In the last week, the S&P has dropped at least 5%, and you guys must be wondering what is going on. So in this video, I'm just gonna very quickly explain to you what's going on. Now, fast forward last week, what first happened was the Bank of Japan signaled that they were going to increase interest rates. Then the Federal Reserve, the US Federal Reserve, made a decision not to increase interest rates. 2 days later, the Bank of England announced that they will be reducing interest rates. So if you rewind 2 years back, when the US went from 0% interest to 5.5% in 13 months, unprecedented, never been done before, Japan actually chose to keep its interest rates low at 0 or negative. Because of this, during this 2-year duration, what has happened was it's known as a carry trade. A lot of funds or businesses that could borrow very cheaply in Japanese yen, what they did was they actually borrowed Japanese yen, converted it to buy US assets or in US dollar denominated. So what happened was they swapped the Japanese yen to US dollars. Of course, in the last 2 years or in the last 12 months at least, the S&P 500 has been on a tear, right? It's been going up like there was no ending. Now, because the Central Bank of Japan has signaled that they will actually increase interest rates. Now, this is the second time that they're doing it. It's going to cost borrowers who borrowed it very cheaply much higher interest rates now. Now, at the same time, because they have to repay these debts back in Japanese yen, they would essentially have to sell their US dollar assets back to Japanese yen. So this explains why the Japanese yen versus the US dollar, the Japanese yen appreciated 9.5% in less than a month against the US dollar, because those borrowers that are unwinding their carry trades are actually selling US assets very quickly as they can, converting it back to Japanese yen so that they don't lose out. Of course, in the last 2 years, they've been experiencing great what we call almost risk-free profit, right? So they hit on two sides: increase interest rates, and also they need more US dollars to buy back the same amount of Japanese yen that they did 2 years ago. So this is known as the unwinding of the carry trade. Now, has this happened before? The short answer is yes. Our late founder actually had an article published explaining the carry trade, and this was back in 2007. Now, the question is this going to be a mild correction, or is this going to be a full-blown recession? My personal view is this is actually going to be a short-term effect. So if your portfolio is good, fundamentally sound, whether you're investing in US assets or otherwise, it's all going to be affected in the short term, very much largely driven by sentiment. Fear breeds fear. But if your portfolio is good, fundamentally good, and it's got a good business, my bet is that eventually this will recover and we're not going into a full-blown recession like what we felt in 2022 or during COVID or back in 2008. I hope this was useful to you. I'm going to share a link below on the original article that our late founder actually wrote about. It's a great history lesson, and it's happening again. Good luck to you guys. Don't panic.